I'd like to welcome all of you to the 12th annual The Real Deal New Development Forum and Showcase. My name is Amir Kurangi. I'm the publisher and founder of The Real Deal magazine, and I'll also be your moderator for the first panel. If you haven't taken the time to walk around the booths and see some of the exhibitors, please take time to do that at some point today. The exhibitors helped us pay for this event, so that's the least we can do, and it'll be greatly appreciated. There will be several panels today. Later today, there will be a talk about crowdfunding, the EB5 program, and the influence of Chinese investors in New York City. Heather, I think we might have to shut down that door in the back, okay? We'll end the day with a Q&A with Ryan, Luis, and Frederick, the stars of $1 Million Listings. That'll be at 5 o'clock. We're seeing the first panel is going to be focusing on residential development and luxury development here in the city. We're seeing land prices go through the roof. We're seeing construction prices go through the roof. We're seeing prices per square foot go through the roof, and records being broken pretty much every other week. Our panel should have a very good idea of what's to come. Joe Moynihan is the founder and CEO of the Moynihan Group. Joe is one of the largest landlords in the country, operating more than 20 million square foot portfolio. In New York City, Joe has dozens of properties which he owns and have developed, including the W Downtown Residences, 3 Hudson Boulevard, 3 Columbus Circle, and I just learned very soon something on the High Line. So we're very excited to have him and get his input up. Joe, come join us, please. Joe is also the best dressed man in real estate. I don't think anybody can argue with that. Zeal Feldman is the chairman and founder of the HFC Capital Group. HFC is only 10 years old, but in the last 10 years, Zeal has developed or has under development 5 million square feet of residential assets, making him one of the most active developers in the city, up there with Related and Extel. Just last week, HFC closed on one of the largest parcels of land on the High Line, making it one of the most expensive development acquisitions in the history of New York City. Zeal, please come on up. Adrienne Albert is the founder and CEO of the Marketing Directors. She is responsible for the marketing and sales of $30 billion in properties. That's quite remarkable, actually, now that I say it. She's a pioneer in new development marketing and started in the business when the term luxury condo was created in the early 1980s. Come on up. Isaac Sembahar is CEO of the Alexico Group. He's the developer of the high-profile projects such as the Grand Beekman, the Laurel, the Mark Hotel, and the famous Herzog de Meuron-designed 56 Leonard. Isaac, come on up. Now, if we have time, I'd like to open up the questioning to the audience as well. So let me go through my questions, and then if you have questions, come stand here, and I'll make sure to get you guys. I'm going to pose this first question to Joe. Joe, you've been in the market for a long time. You bought a lot of the great assets that you're building today 30 years ago, or more than 30 years ago. So you really saw this stuff coming a long time ago, or really took a big chance. You've been through some real booms and busts, and I think everybody on the panel here knows that every market goes through an adjustment. And right now, we're definitely in a boom. What characteristics does this market have that the past markets didn't?
Amir, I think one of the most important things is the discipline in the market, especially when it comes to development and lending. I think with the development that we are confronted with the homework that the developers do, I think it's very safe to say that what we had in the last downturn will not happen, hopefully. And if it's going to be another downturn, it will be something of different. It wouldn't be because somebody miscalculated in borrowing or miscalculated in their project, or they paid a higher rate of interest than they should and all of that. So it's safe. And I think also you're looking at a different New York when it comes to development. I think you're looking at a New York that is very, very heavily focused on foreign investments. Buyers are coming from different countries, be it Asia, be it Middle East, Europe, and South America, in addition to people from United States. So New York is in place for rental, for condos, to shop, to dine, to stay in hotels, and all of those are very, very good areas of investment in New York to be in right now.
So you believe that the discipline in general has changed in terms of the buyers, the banks?
Definitely. Yeah. I think the discipline has changed. I think the days of overborrowing is behind us. I think the calculation of risk and reward is at its highest that I have ever seen. I see time being spent more on this specific risk and reward area than anything else, such as design or anything like that, which is probably the most important bloodline to any development right now.
Zeel, you have a lot of projects in the pipeline. So, I mean, for you, how are you planning for any sort of market adjustments?
Well, I mean, markets are driven primarily in Manhattan by supply and demand. And with all the rhetoric around town about potential bubbles and over-exuberance, the reality is that Manhattan alone is only producing 6,500 apartments per year over the next several years. And in the peak of the markets in 05, 06, we were generating as many as 15 to 16 to 17,000 apartments. So from a market demand perspective, it's as healthy as it's ever been. What we're seeing, however, and I know I did pay a nice price for a piece of land last week, but generally, a lot of some of the overexuberance was in unrealistic assumptions on what one could sell a product for in a particular building in a particular location. It's not a God-given gift that every developer who's building something is going to command the price that he's asking for. So where you have problems is where you have over-aggressive Excel spreadsheets that are showing projected growth in whether it's office, retail, or residential, which is our area, very aggressive price per foot assumptions, and those projects in those neighborhoods, in those buildings, would never achieve those kind of pricing. So that's where I think there may be some potential adjustment in what people's expectations are. But overall, supply and demand has never been stronger.
What sort of prices per square foot are you hoping to get for the land that you recently purchased? Because, you know, those were some record prices over there.
Well, we didn't pay record price per foot for the land. It's just a big piece of land. Maybe there's natural gas underneath. We're going to frack.
That would be ideal, right?
But oil's down, so who knows? You know, we're selling a project almost 70% sold a block away, which is only 120 feet high and off the water, without the 360-degree view we have from the highland to the water. And there we're going to settle in around 2850. So our expectations for our side are far greater.
Adrian, how do you help a lot of these guys manage expectations? You set them up for, how do you manage their expectations, especially like in a market right now where, in general, I feel like people feel like it's frothy, right? And how do you manage expectations when Joe comes to you and says, you know, how come we haven't sold all of my penthouses?
Do you have to mention my name?
You guys work together, so that's why I mentioned it.
Well, first of all, I don't manage Joe's expectations. He really has his pulse on the market, and he's one person whose expectations would be very difficult to manage.
Can you hold this up? Yeah.
He's one person whose expectations would be difficult to manage. However, it is true, oftentimes people will hear numbers being thrown around and they don't understand why it's not feasible to get it for their project. I think that our research department has been able to enlighten many developers as to what's really happening as opposed to what's being discussed as happening. I think that it's very difficult for people who are marketers today to be able to deal with these issues, because we're usually asked to deal with what's going to happen in 2, 3, 4 years. And it's very difficult to know what values may be then. But if it works for today, it should work then.
And what is really happening, if you could sum it down for everybody here in 2, 3 sentences, what is really happening in the market today?
The market, it's true, Zeal, the market has less product today. It's back to its levels of about 2005 in terms of product being delivered in the marketplace today, condominium product. Rental product had an astronomical rise to about $80 a foot. Now we're seeing buildings climbing to $100 per square foot in rents. That prices a lot of people out of new rents and puts them into older buildings. It also, when you look at the cost of those monthly rental bills going out, makes a lot of people think that perhaps they should become buyers. We don't have a lot of mid-level condominium product hitting the marketplace, mid-level being $2,000 to $2,500, believe it or not. I didn't hear any gasps. Okay.
This audience is used to it, I think.
Yeah, I guess so. But our median, or I should say average price in Manhattan now is going $2,800, $3,000 a square foot. Of course, there are projects that are considerably more than that at $8,000 and $10,000 a square foot. The average price, including resales in Manhattan for condominium apartments, is $1.8 million. So there are opportunities for people that are not in the stratosphere. For example, 1.8 million, you need about $4,000, maybe a little bit less per month in order to carry a mortgage for that, and usually the carrying charges themselves on these homes are relatively light. So if you figure $5,000 a month, many of the new rentals are at that price for very small homes. So there will be a shift. There is demand both in rental and in for sale, and we look forward to more condominiums being delivered into the marketplace to meet this demand in the future years.
Isaac, Mickey Naftali recently said that in the last year he had over 1,500 deals come across his desk. Not one of them made sense. And he said he's going to pack up his bags and go to the Caribbean for the next few months and wait for the market to adjust itself.
Me too.
That's good. More deals for us. Tell them to stay there for a while.
What kind of deals are you seeing? What kind of deals are you seeing come across your desk, and what percentage of them make sense?
I guess Mickey has been busier than I have, but look, it is pricey. It's true. But you know, this market depends on products. It's everybody can look at the land, and Zeal sees his land that he just bought in a different way that Mickey would see it. So it's about what could you create from this raw product, and so it's all about product, but it is pricey. I mean, not only land, people concentrate on the land prices, but construction prices are high. There's a shortage of contractors. There's a lot of challenges. The red tape is not getting any easier, but that's what we do. We're not dentists. We're not investors. We build buildings, and you gotta find the right niche for yourself and go for it.
I want to encourage the panelists to chime in if, at any point if you feel the urge. What does it mean? I mean, we have, I don't know how many people we have here right now, but we have plenty of people here right now. What percentage of these people do you think can afford apartments in your developments? Because I have about 53, 60 people who work in my office, and they're all coming from all over the place. They don't live in Manhattan. I can't afford to pay them to live in Manhattan. And that goes for a lot of other places. And I'm sure people in your own offices, they can't all afford to live in Manhattan either. What will that mean for the city? And in all honesty, what percentage of people do you think can afford to pay $2, $3 million for an apartment? And that's on the low end for some of you guys.
Amir, I think one of the best programs that exist in New York is the subsidized affordable housing of programs like 80/20, which is in place, and hopefully Mayor de Blasio will continue to look at it in a favorable way, to work with developers in New York to make sure this program continues and stays at the same level, because there are talks about doing 25 and 30 and so far. But come to think of it, this program is one of the most important programs that exist to keep the working class in New York City. So this way we can get service in New York City, we can get the firemen and the policemen and teachers be able to take care of the people in New York. It's a great program. On West 42nd Street, the building that we are just about to open our rental office, which is the, it's called Sky. It is 1,175 apartments. It's the largest tower, residential tower in New York City. And I am very, very happy to say that in every aspect of the way, environmentally and neighborhood-wise, we are happily have 235 affordable apartments where the rents are, I don't know how much, but below $1,000 for those apartments.
You know that for those 200 or so apartments, you'll have thousands of people applying for it.
We expect 80,000 applications for the 235 apartments, but I think we're doing our share, and other developers, if they do their share with the vision of our mayor, I think the problem is on the table, on the radar, and hopefully gets on. But we are very, very excited to have the 80/20 program building open, which has huge amenities, 70,000 square feet gym club, and many, many other amenities to mention here, and would be a great program such to keep people in the New York area.
Isaac, other than the 2080 program, do you see any solutions for the working class here in the city, other than having to go to, you know?
I wasn't prepared for this question. I missed the conference call, but I know it's a problem. It's a big problem. What I don't understand from the mayor or anybody in that mindset is why us? Why, you know, we are forced by the market forces. I mean, if you wanted to build today, you got to pay a certain amount of dollars for land. Otherwise, it's not making sense. I mean, why is this whole weight on the developer's shoulder? If the city wants to tax everybody, including us, and buy land and want to build their own buildings for whatever it is, I'm for it. I understand the problem, and I sympathize with it. I think it's a big problem for New York. There has to be diversification because there has to be diversification, but it shouldn't fall on the developer's shoulders only. That's what the part that I don't understand or I can't reconcile is that part. But I don't mind paying my share of taxes if the city wants to tax all of us and build and buy land like we are doing. Nobody's helping us, and we are doing it at our own risk.
Adrian?
I'm not an 80/20 expert. However, I think that the opportunities for people to go to the outer boroughs, to Brooklyn, to Queens, and the transportation is excellent between Manhattan and those areas. New Jersey, the Gold Coast of New Jersey is exploding with people who are priced out of Manhattan. And the housing available to them in these areas is excellent. So it's not as if they have no place to live. It's not as if they have to live in the most expensive real estate in the world, or at least in our world, perhaps. So there are alternatives, and it would be interesting to see a program that could work for developers as well as provide housing that's close in and improve the public transportation systems. I think that's critical to whatever is done.
Absolutely. Zeel, did you want to chime in?
Well, first of all, every major city in the world has affordable housing issues. London, for instance, which is zoning restricted, there are a lot of height restrictions, so affordable housing there is much more toxic than it is in our city. Having said that, the mayor's program actually, with the support of Rebney and the real estate community, is something that potentially can create more affordable housing by increasing density and increasing height. So again, unlike London, the city continues to grow vertically. The quality ironically, the quality of life tends to be better as a developer when one builds high instead of one builds low rise. Low rise takes up more square footage, takes up more land, it eliminates more air and light. One of the things that people like about parts of Brooklyn is, Manhattan's built on a grid, so essentially, certainly downtown, you have a lack of air and light. But imagine if that was spread out horizontally instead of vertically. Like London, it would create a lot less ability to create affordable housing. We do have a product that we're selling now on 53rd and 8th. We like to call it approachable affordable, but the reality is it's total dollars, and we're selling 3 bedrooms for under $2 million and 1 bedroom for as little as $750,000. So if one had bought right and one can execute properly on their business plan, there are buildings currently that are in New York that are far cheaper than parts of Brooklyn, where you can be all in for less carrying costs and the cost of renting almost anywhere in the city. So it's really delivering the right product to the right location. Demand is insatiable. We sell an apartment almost every other day. So the demand is still there, both for affordable and not affordable. But the only way you can create more housing within the city itself is to allow developers to go higher. The problem with the mayor's plan is he doesn't dictate what city council says and what community boards say. So I'm not overly optimistic that in execution it may happen, but it certainly has the support of our company, Revenue, and a lot of other developers.
All right. Can I ask somebody to close the door back there from the Berman Group? I have a question about penthouses. In the old days when people said a penthouse, it would be the top floor of the building, and you knew that you were, sitting on the rest of the building. Today, you have multiple penthouses, multiple floors of penthouses, and the discrepancy between the prices from a similar size unit in the building compared to the penthouse seems to be fairly high. And I think as a result, you're seeing a lot of penthouses sit on the market longer than the rest of the building. Am I missing something? Is there a big difference here in the penthouse unit that's almost the same size as a regular 3-bedroom unit, but it's going for, 40% more or 30% more?
Beside the button in the elevator that says penthouse?
Well,
I think when it comes to condos, between Adrian, Zil, and Isaac, we have over 100 years of experience in condos, more than anything I would say. But I think it's all about view. It's about the amount of glass, the amount of, I guess, once the project goes over 500 feet or so, above 500 feet, no matter how many floors you have, it's considered a penthouse, and that's where you get the premium. And of course, then comes corners, then comes the amount of footage and all of that. But New York, and especially some parts of the West Side and downtown, because we are very close to water in both of those sub-markets, as soon as you come out, you start seeing a lot of sky, a lot of views, a lot of water. And why not call those premium apartment? And premium apartments, another word for premium apartment is penthouse.
Adrian, how would you market that?
I agree with Joe. There are also psychological aspects. And there are people who want to be the top dog, the big dog in the building, and they want to live in a penthouse. So if you can legitimately increase the number of penthouses, you can increase your yield from a building. And you can also satisfy a need in the marketplace. The key is the more differentiation you have with the non-penthouse homes, the more likely you'll be to be able to get increased yields from those.
Yeah, I think that's what I'm saying. I'm not seeing that much of a huge difference from
Well, you may see higher ceiling heights, or you might see a different finish level, or there may be some other perk that goes with those homes in order to make them special, beside the thing in the elevator.
Can we all agree that if a unit is worth $10 million or more, the finishes should just be spectacular? I mean, there shouldn't be a huge difference between a $12 million unit and a $30 million unit, unless there is, I don't know.
That's a starter apartment you're talking about.
I'm sorry?
Starter apartment?
Starter. How important is geopolitics for you guys when it comes to picking up a project? We had a similar kind of a panel in Miami last month, and somebody said that there was a period that every month he was sending a fruit basket to Hugo Chavez because he was his top selling person. And all these Venezuelans were coming to Miami and buying wholesale, trying to get money out of Venezuela. And a few weeks ago, I was on another panel. A very prominent real estate figure said, the more messed up the rest of the world is, the better it is for New York. And he said, I hate to say it, but that's a matter of fact. How do you guys feel about that?
We used to say that we could predict where the next troubled hotspot was in the world by where buyers were coming from, because those in those countries wanted to get their money out. New York is a safe haven. It's a wonderful place if they intend to visit it. It's a world-class city. And it was very obvious when all the Venezuelans came, we knew that there was going to be a problem in Venezuela. When the French came, we knew that there was going to be a change in the French government and that things may become different in France. You can track that.
Who are you guys seeing now? Who are your recent buyers that would surprise the audience?
I think the biggest force today is China.
China.
Yes, I think the biggest force is China. They're here. They are very intelligent. They're very smart. They are putting their bets on the right things. Mm-hmm. They are very, very educated, and they are surprisingly coming with good advisors, accountants, lawyers that are telling them exactly what to do and what not to. And they're smart investors, very smart investors.
Zeal?
We're developing in Miami and Manhattan, and the markets are quite different. Miami market, primarily along Miami Beach, along the water, is being driven primarily by New Yorkers. Most of the inventory over the last over the 20 years of inventory that's been eaten up in the last couple of years in Miami was mostly Brazilians and South Americans, but that was on a lower cost product from $400 to $600 a foot. All along the beaches, all New Yorkers. Conversely, in Manhattan, with all the talk about foreigners, it doesn't really account for more than at most 20–25% of our market. You have certain buildings that are very foreign-centric. You've been reading about Time Warner building, you've been reading about 157, but overall the foreign market is not what's driving the real estate market in New York. It's supply and demand for housing, for living, and for working here. It's the high-profile numbers that are being driven by foreigners. It is absolutely true that it is a flow of capital from everywhere in the world to New York, which should overtake London just on a GDP basis within 5 years as projected. But a lot of that is also the financing community and the communities that are buying hard assets. If they're not going to New York as a first resort, they're going to Southern California. If they're not going to Southern California, some of them are going to Miami. Chinese, for instance, are only first coming to Miami now in a fairly big way. So it's very location-driven, but clearly our political system and our transparency is attracting a lot of capital, but it's a little overblown in New York.
So your experience has been that the buyers for your condos have been New Yorkers buying for themselves, for the most part.
We have a property we developed on 68th and Madison, which is a 100-year-old building. That type of product was mostly locals. The gleaming skyscrapers, 157s, and the Time Warner is a big Asian community that like that type of product. Some old Russian money, which is attracted to that as well as pre-war. So every building is really different. But unless you're appealing to a specific type of buyer, the foreign interest is really less than a quarter of your inventory.
It seems to be that the units above $50 million tend to go to foreigners, from what I've seen, unless it's Bill Ackman buying an experimental $100 million apartment. But Adrian, your experience with?
Yes, but I just wanted to add to that we're also seeing the influx of Chinese developers come into our marketplace. And this is a much more recent phenomenon. So not only are there Chinese buyers, there are Chinese developers. It will be interesting to see what happens to the Chinese economy, which has slowed a little bit over the next few years, but they're well financed and they're eager to get into our marketplace. So, and they often tend to pay higher prices for land. So it puts a lot of pressure on our local developers to be able to compete with them.
I'm going to take this moment to do a quick promo for The Real Deal. We're doing our first show in Shanghai from September 10th to the 12th. That'll be focused on U.S. developments. So it's the first U.S. development show in China ever that we'll do on September 10th to the 12th. If you come there, I'll buy you tea. But it might cost you $5 grand to get there. In terms of prices per square foot in Brooklyn, you're seeing more developers who are getting comfortable with going into Brooklyn where they weren't before. Zeal, Joe, when we talked a few years ago, you said, if I'm going to do anything, I'm going to do it in Manhattan. Would you consider going to Brooklyn or to the outer boroughs?
We are looking in all the boroughs. I love all the boroughs. Everybody that I work with, especially the younger generation, they love those new locations. But fortunately, we have enough product that we own, even though we are looking to build the next several years mainly in the west side of Manhattan. We will be busy for the next 5 to 6 years with what we have. But we are looking in all the boroughs, and we are looking in Manhattan also, and we are about to make a deal in Manhattan on a piece of land that we don't own today that we like to build. So we're keeping our eyes open, but overall, you know, I always had this philosophy that even though the boroughs are great, there is 2 countries in one country. The Manhattan is one country, and the rest of the country is another country, even though we own a lot of other assets outside. But today, the pressure and the velocity is in the city more than anywhere else, and the demand factor, the willing to finance, willing to buy, willing to invest, or willing to rent, Manhattan seems to be the center right now.
Zeal, Isaac, would you guys consider going to Brooklyn or Queens?
As Seymour Durst once said, only buy a building I can walk to. That's what he said. We have, everything we've been doing is been in Manhattan. We are looking at one very big project in Brooklyn, but frankly, it's all risk-reward driven. We're seeing the spreads, certainly in Brooklyn, are contracting, and most of what we're looking at in the outer boroughs, the all-in costs are getting a little too close to what we think the revenues look like.
Isaac, would you consider the outer boroughs?
Yeah, I mean, look, anything that makes sense.
Can you hold up?
Yeah, okay. Anything that makes sense. You know, it doesn't have to be in Manhattan only. Boroughs are great, but, you know, again, that's also getting pricey, and you know, it's sometimes, Manhattan is at one point is looking not that crazy when you look at those prices. So basically, whatever makes sense. I mean, the boroughs are great they have great fundamentals. Again, you were talking about New York and foreigners, and the fundamentals are here. You know, geopolitically, the States is more stable than most of the world. Economically, we're doing much better than the rest of the world. There's a lot of money looking for a safe home. And this is a safe home, whether it's Brooklyn or Manhattan and then, you know, being in a city that it's, you know, 24/7 culturally, entertainment-wise, it's a hot city. It's a happening city. People want to be here, whether you want to invest. I mean, look, you know, if you had money to invest, or if you're Chinese and your kid is going to Colombia and, you know, you have a few dollars, maybe you want to buy something here because it's a safe home. It's a diversification, and that's what makes New York different than to the rest of the. It may look risky to some people. The deals we all make may look risky, but if you check the fundamentals, this is where it is. I mean, so yeah, I'd invest in Brooklyn.
Well, interesting thing about the Chinese is that they like to buy in community areas. Same people, same groups like to buy in the same areas, in the same buildings. There was a building that went up in Flushing, and 122 units went off in 3 hours, and it went all to Chinese buyers, which I thought was really interesting. And another point on the Chinese is that the #1 reason they buy outside of China is for education. That's the #1 reason. The third purpose is for return on investment, which I thought was also interesting. What do you guys think about the tax plan that de Blasio is proposing, the mansion tax, and how will that affect? I'm guessing it won't really affect the higher markets, but the lower markets, you know, it might see an impact. Joe?
I think this relates to condo sales. I don't know if such a thing will affect land prices or affect construction prices. It just adds another layer of expense to the developers' bottom line, which I think it's hard as it is. It just makes it much more difficult. And I hope, I hope that they would reconsider. I don't know about the mansion tax as much, but it's not a positive event if it happens.
And generally, when you think of a mansion, you feel like it's going to be the biggest. It should be called the penthouse tax, you know, instead of, because a $1.7 million apartment is pretty much every apartment in the city. Isaac, Zeal, what's your take on it?
Look, what I don't understand is, I mean, I've always learned to follow the money, and we are here chasing, you know, away the money. I mean, why is it such a wrong thing for foreigners to buy in New York? I mean, whether they're buying penthouses or apartments or walk-ups. I mean, I don't see anything wrong with it. This is a free country. Everybody should do whatever they want. And why am I chasing that money away and taxing them more, making it more difficult for those people to buy? That's the part I don't understand. Because they don't live here, so what? They're paying real estate taxes. They're shopping when they're here. But, you know, why is that such a bad thing? And why should we tax them more and make the mansion tax 2.5% or whatever it is? And look, London tried it, and I think, like Zeal said, there's going to be a point New York is going to surpass London, and there's a reason. And it is a very challenging environment for a builder right now. I'm not crying wolf, but it is everything. And buyers, I mean, the velocity of sales is not really there. It's not like 2 years ago. And to put another nail in that coffin, you know, why would we want to do that? At the end of the day, construction, sales, any type of economic activity is good for New York. And what's good for Zeal, it's good for somebody who's working in a construction site or in a hotel, his family, her family. Those are the things that somebody has got to sit down and explain it to me, because I don't get it.
Zeal, I think you have an opinion on this.
Under the current proposal, which is probably going to pass, it's not foreigners, it's everybody. So it's not as bad as it could have been. It's about a 1.75 or 1.5. London's had it, other states have had it. It's the cost of getting 421A approved currently. As far as the impact it'll have, you know, if the sponsor's doing well, he'll give a discount of 1%, 1.5%, and they'll pick it up. Do I think it's going to quash sales at all? I don't believe it. If the margins are that tight where a sponsor can't afford to pay a 1.5% tax on behalf of the purchaser, or the purchaser's not prepared to pay that 1.5% extra, then you shouldn't be in this business.
All right, I'm going to ask a few more questions, and then I'll open up the questioning to the forum. Adrian, what are some of the mistakes you see developers make that you try to sort of stop them from doing? I mean, these guys are consulting with you before they start projects.
How much time do we have? I think the biggest mistake that people make in general, and developers included, is not totally understanding their market and going based on hearsay information. It's critical to really understand who your market is, what they can bear, and what they're looking for. If you can create a product that speaks to that need, then in fact you'll be able to charge more or be able to be absorbed faster, instead of just doing the same old that has been done. I also think that there aren't as many people who have Zeal's wonderful approach about 1.5%. And sometimes in order to make a deal, you do need to be flexible. And you do need to ask yourself, how much will it take for me to get this? And where will I be after I get it? Am I going to be in a better spot because I sold that home than I am now before I've sold it?
We recently did a story about how a lot of the financing that's happening for these projects are coming from outside of the country. What does this say about the confidence of the bankers and the lenders and investors about this market where most of the money, I mean, Zeal, you raised $1 billion last week, and that was mostly from overseas. What does it say about the confidence of the bankers and investors in this market when you have most of the money coming from, foreign countries?
Actually, our financing was 70% and it was all local. JP Morgan is a U.S. bank. Still, maybe our government owns it, but it's still a U.S. bank. I don't, there's always been a consistent flow of foreign, quasi-foreign. I mean, Deutsche Bank is a foreign bank, but on their balance sheet, most of their real estate is in the US. So there's always been a mix of foreign banks and local banks, and frankly, they're driven by a number of different things. A lot of them are interest rates, a lot of them are core capital, a lot of them have to do with the politics and the economies of Europe and other places. Having said that, China has definitely entered the game both as a developer, as somebody said, and also some of their banks are coming in as well. So we are seeing, we haven't been privileged to deal with them yet, but we have seen lower interest rates by Chinese companies, but with a tail attached. It also includes potentially doing construction, and it also includes potentially having equity interest. So I don't think we're seeing more foreign demand now than we always is, just it's always ever evolving.
Isaac, 56 Leonard, you had to stop construction because of the recession at some point.
I don't remember that.
Yeah. But, you know, in hindsight, I mean, it turned out to be an amazing project. You sold your penthouse there for about $47–50 million. If you could have done it today, seeing how the project ended up, would you have increased prices for your penthouses and units?
I don't think so. Like I said before, I do think that the market has slowed down a touch, and I think pushing the prices is a risky game. I think you're better off leaving some money on the table and than feeling, oh, did I get the last dollar out of the table? I think it's always good to leave the table when you're ahead. And so I wouldn't have changed the price. I'm pretty happy with, you know, it was a record sellout, and it was a record time. And I timed it that way. The first time the second time I got it. But the, look, I wouldn't, I mean, to answer directly the question, no, I wouldn't. I think we got a fair price for it.
All right, I'm going to take some questions from the audience. Is anybody? Yes, ma'am. Hi. So the question is, as costs go up and they continue to go up, union versus non-union, and there's been some accidents on the sites, you know, recently, and who should be accountable for that?
Zeal, go ahead.
You want me to address the accountability issue first? You know, with more construction going on, there are more hazards. As we build more, you tend to have more accidents. Thank God we haven't been a victim of it yet, but frankly, I think it's just a matter of chance. It has nothing to do with whether it's union labor or non-union labor. If you look at the accidents that have occurred, there are some companies, there's a new city council proposal that came out yesterday actually looking to govern the construction industry to try to prevent some of the accidents that take place. But the city is really, you know, we bought a site on 51st and 2nd, which had the worst accident in the history of the city, where the previous owner, 7 people were killed when a crane collapsed. So a lot of changes have been made. I'm not going to say occupational hazard of the business, because that would be demeaning, but more accidents, more work. With respect to construction costs, absolutely have they gone up. They've gone up 30–35%. The city is more open shop than it ever has been. All my competitors and some of the largest developers in the city are all pricing both union and open shop and non-union. The combination of high costs for land and high costs for construction can make some projects untenable. And that's part of the 421A dialogue that's going on, where the administration's also enforcing minimum wage labor positions, union and affordable. Probably it's a no-starter in this current land cost environment. But you definitely have to take into account additional costs. And by the way, even with GMPs in place, costs continue to rise, mostly for labor, with the decrease in some of the demand coming out of all of Asia. Costs of material have really not kept up with the cost of labor.
So, union, non-union, I mean, union adds about 30%, 35% to the project. Is it?
Union labor has come down. It's really a function of job specific. Generally speaking, of course, union labor is more expensive, primarily because of the staffing requirements. Having said that, today union shops are also being more competitive because everybody wants the business. There isn't any union hall that's empty. Everybody is at work. So the issue is not whether or not people are getting turned away from jobs. There's more jobs than there are people who can actually execute. Whether you're union or non-union, construction costs have been rising somewhere close to 30% since 2010.
There are a few factors. Obviously, life safety is the most important factor in any development. And then that's part and parcel of few items. First, I would say, starts with design. You know, architecture, engineering, something that's easily achieved, has less risk of injuries. That's very, very important to begin with. I think the scheduling of the project, so how you stage the project, what is the comfortable schedule, union and non-union, is a very important factor in any project, not to rush the project. Every project needs to be rushed, but there's a limit how much you rush the project. And obviously the safety format of every project, of what are the safety guidelines on any project, is most important. And everybody aims at building a safe job. Unfortunately, sometimes it doesn't work out that way, but it is probably the most important thing. Union versus non-union, which is like a different issue. I think there is risk and rewards in both kinds. As Zil says, everybody prices both. Union seem to recently see things with the open mind, and they are participating in some ideas that are put in front of them that gets a lot of people to work. And hopefully this city will be a good mixture of both, wherever the need be for union and wherever need be for non-union.
Yes, sir.
Just a quick question around zoning regulations to what will do for land prices in the city. There was a recent article in Economist talking about land prices and regulations, especially in the areas that are very, very densely populated.
Can you speak up, please? No. Can we grab a mic for him?
Here. Just questions around zoning regulation of land prices, right? There was a recent article in Economist.
Yes. Thank you.
So the question is around zoning regulation of land prices. Recent article in Economist talked about how densely populated city don't have a right regulation in terms of zoning. Do you see that there's anything that can be changed to open up more land for more buildings that you guys can?
I sort of touched on that before. Creating additional height and density, and in return for affordable housing, will create a better mixed environment for people to live in and a higher quality of life. And all you really have to do is look at the London zoning district, and Paris is quite different because most of it is landmarked, like most of New York, by the way, like most of the city. But higher density and responsible higher density and height, as long as it's not casting a shadow on Central Park, I think is a very positive.
Yes, sir. Daniel is a developer himself in Miami, so he's curious, you know, what drives you as developers, and you know, what drives your passion for development?
Craze. Look, you know, I guess since you're a developer in Miami, it's the same thing. I mean, this is a business where you spend a lot of years designing stuff, and there's a big lead time and everything. But at the end of the day, the product, you know, something that when you walk in the street and you pass by a building you built that's going to stay there for 100 years, it's something that we all live for. I guess, you know, we're not for nonprofit, but it's not just profit. It's just that, you know, this is not something that's going to be there just for 2 years or 3 years. You got to be responsible. It's going to be there for 100 years, hopefully, and that to see that design come true and to be able to build it in a city like Manhattan, like 56 Leonard, a 60-story building with moving plates, and you know, it's a tough project, but once it's done, there's a lot of pleasure that one gets out of a project like that.
I think my passion is creative problem solving, whether it's creating the right product or whether it's branding it in such a way that it is compelling and meaningful, whether it's pricing it, selling it, renting it, it's all problem solving. And when we can deliver a profit to our developers, that's proof that the problem was solved correctly. So that's what my passion is.
Zeal?
I think it's the challenge, the creativity, the ability to come in contact with people from so many different walks in life, both professionally and on the consumer side. I mean, real estate developers and otherwise, you encompass the financial market, you encompass the art market, you encompass the cultural market. You really, I have 2 boys in my business right now, actually, and one of them actually wants to do something else. But you have the ability to literally, it's not a job behind one's desk. You can touch many people in many different ways, and you do leave, hopefully, a positive impact on what you're actually building and creating and adding to your city that you're building in.
Joe?
Amir, being born in a different country and coming to this great country and living and creating a life with my family in New York City, working in New York City, kids go to school in New York City, we work and live everything in New York City, being in the business of real estate, being in the last, I would say, past 10 years in mainly concentrating in downtown, the next 5 years concentrating on the West Side, Hudson Yards, the next 10 years participating in what's going to be the Midtown rezoning. All of that is part of the career that we are involved in. We live in it, we enjoy it, we are thrilled to be here, we're thrilled to be in this country, and it's all part of the lifestyle and the career we choose to be in, which we really enjoy.
And the 100-foot yachts don't hurt either. But I want to thank our panelists for participating today. And thank you all.